Gold is surging, Bitcoin is stalling, and for a lot of people watching the markets right now, that feels backwards. The asset that's supposed to be slow, outdated, and obsolete is breaking out to new highs, while the hardest money ever invented is chopping sideways, struggling to regain momentum after months of volatility. To some, it looks like capital is flowing away from Bitcoin and back into legacy safe havens. To others, it feels like Bitcoin is losing its edge just as the world needs it most. But what if that's not what's actually happening? What if gold's resurgence isn't a rejection of Bitcoin at all, but part of a much larger transition, one that quietly strengthens Bitcoin's position in the global monetary order rather than weakening it? Because when you zoom out and look at the incentives, the math, and the geopolitical backdrop, a very different picture starts to emerge. One where gold isn't competing with Bitcoin, it's setting the stage for it. Today, we're unpacking the gold revolution that's quietly boosting Bitcoin, why governments are leaning on what they can control before turning to what they can't, and how this moment fits into a much bigger reordering of the global monetary system. Before we get into it, don't forget to drop a like on the video and subscribe for more content like this. Let's get into it. The macro backdrop right now couldn't be louder. The United States is running historic deficits outside of wartime. Interest payments alone are becoming one of the largest line items on the federal balance sheet. The Federal Reserve is boxed in, unable to raise rates without destabilizing the debt market, and unable to print endlessly without further eroding confidence in the currency. At the same time, global trade is fragmenting. Energy is being settled outside the dollar more frequently, strategic alliances are shifting, and trust, the invisible glue that holds the financial system together, is being tested from every direction. For decades, the dollar's dominance rested on a simple foundation. The world needed dollars to buy energy, and that demand recycled back into U.S. debt markets. That system worked incredibly well, until it didn't. Because once confidence begins to crack, the entire structure starts to wobble. And when confidence wobbles, governments do what they've always done. They buy time. That's where gold enters the picture. Gold is the one monetary asset that governments understand deeply, already hold in large quantities, and can influence without asking permission from anyone else. It sits on central bank balance sheets, it carries centuries of monetary legitimacy, and most importantly, it can be repriced without changing the system overnight. And that repricing is happening right now. Gold isn't just rallying because investors are scared, it's rallying because it's being used, intentionally or not, as a pressure valve for a system that needs relief. By allowing gold to absorb inflationary stress, policymakers can stabilize confidence without openly admitting that the existing monetary framework is under strain. This is why gold can run while Bitcoin appears restrained, not because Bitcoin is broken, but because Bitcoin is uncontrollable. And that distinction matters. Bitcoin doesn't respond to policy. It doesn't require trust. It doesn't bend to political incentives. It simply settles block by block according to rules that no single actor can change. That makes it incredibly powerful, but also incredibly disruptive. If Bitcoin were allowed to front-run every monetary adjustment, it would expose the weaknesses of the system too quickly. It would force conversations that governments aren't ready to have yet. So instead, what we're seeing looks a lot like sequencing. Gold first, Bitcoin later. And this isn't just theory. The incentives line up almost perfectly. Gold can be revalued quietly through accounting changes. Bitcoin can't. Gold can be framed as stability. Bitcoin represents escape. Gold reassures institutions. Bitcoin empowers individuals. So when gold rises, it's not replacing Bitcoin's role, it's reinforcing the very conditions that make Bitcoin necessary. This becomes even clearer when you look at how trust works in practice. Gold, despite its reputation, is fundamentally a trust-based system. You have to trust that reserves exist. You have to trust that bars are pure. You have to trust that audits are honest and frequent. You have to trust that custodians aren't rehypothecating claims on the same metal. And history shows us that trust is often misplaced. Bitcoin flips that model entirely. Its ledger is open, transparent, and globally verifiable. Anyone can check the total supply. Anyone can audit holdings. No permission is required, and no authority can alter the rules. That difference isn't just philosophical, it's structural, and it's why moments like this matter. Because while gold is being used to stabilize confidence at the state level, Bitcoin is quietly doing what it's always done in the background. Hash rate continues to rise, infrastructure continues to expand, long-term holders continue to accumulate, adoption at the institutional and sovereign level continues, often without fanfare. Bitcoin doesn't need headlines to function, it just needs time. And time is exactly what gold buys the system. This dynamic also explains why periods of apparent Bitcoin weakness often coincide with broader educational moments for the market. Every cycle exposes the same lesson in different forms. Assets that rely on trust eventually fail that trust. Assets that don't endure. We've seen this play out repeatedly with speculative tokens, leverage-driven excesses, and centralized platforms that promise returns without transparency. Each failure reinforces the same conclusion. Not all digital assets are equal, and scarcity without decentralization is just another form of risk. Bitcoin stands apart precisely because it doesn't require belief in people, institutions, or narratives. It requires only verification. That's why when the dust settles, Bitcoin doesn't need to win the moment, it just needs to outlast it. And this brings us to the bigger picture. We're not watching a normal market cycle. We're watching a transition, a slow, uneven shift from a trust-based monetary system to a verification-based one. Gold plays a role in that transition because it bridges the old world to the new. Bitcoin completes it. Gold can be repriced to make balance sheets look healthier. Bitcoin can't be manipulated to serve political timelines. Gold can stabilize, Bitcoin can reset. And that's why the two aren't enemies, they're sequential tools. From this perspective, gold's strength isn't a signal that Bitcoin is failing, it's a signal that the system is preparing for a world where confidence must be earned, not declared, where reserves must be provable, not promised, where value moves at the speed of the internet, not the speed of bureaucracy. In that world, Bitcoin isn't optional, it's inevitable. And the signs are already there. Governments accumulating seized Bitcoin instead of selling it. Financial institutions building infrastructure instead of dismissing it. Energy producers monetizing excess power through mining. Individuals choosing self-custody over counterparty risk. These aren't speculative behaviors, they're defensive ones. They reflect a growing awareness that the old rules no longer apply cleanly, and that flexibility, neutrality, and transparency are becoming non-negotiable properties of money. So when you see gold running and Bitcoin consolidating, don't assume capital is fleeing forward into the past. Consider the possibility that the system is adjusting in stages, that what's controllable moves first and what's unstoppable moves last. Because when trust finally breaks, and history suggests it always does, gold can help soften the landing, but Bitcoin defines what comes next. And that's the quiet truth behind this gold revolution. It isn't sidelining Bitcoin, it's buying time for the world to realize why Bitcoin exists in the first place. So whether this sequence is deliberate or emergent, the outcome remains the same. Scarcity that can be audited beats scarcity that must be trusted. Systems that verify outperform systems that promise, and money that belongs to no one ultimately serves everyone. Gold may be the state's instrument in this transition, but Bitcoin remains humanity's. Let me know what you think. Is gold's rise a temporary detour or part of a deeper realignment that ultimately strengthens Bitcoin's role? Drop your thoughts in the comments below. If you found this breakdown valuable, make sure to like the video, share it with someone who's been confused by the divergence, and subscribe for more high-signal Bitcoin content. Thanks for watching, and remember, there is no second best.